The fastest way to stay funded for years is to stop treating all accounts like they are one giant bag of money. From the first second of this guide, the message is simple. Rotate accounts the right way, and payouts become normal. Rotate them the wrong way, and everything disappears in a week. The strategy is built from watching hundreds of traders blow chances they could have protected with one small change. He learned this the hard way by studying both Forex traders and futures traders who scaled too fast or risked too hard. The goal is to make sure you never repeat their mistakes. The smartest traders treat each account like a separate tool. One tool for testing, one tool for pushing, one tool for collecting payouts, one tool for rebuilding confidence. That is the core of real account rotation. The approach works because prop firms give accounts with rules that reward patience and punish chaos. When you rotate accounts correctly, patience becomes automatic. Imagine a trader holding 3 Forex funded accounts of 100K each. He also has 4 futures evaluation accounts and 2 live futures accounts. Most beginners would connect all of them to one copier and take every trade on every account at the same time. That feels powerful until the first bad day. One wrong trade means minus 1% on every account at once. On a 100K account, that is minus 1,000. Across 3 accounts, that is minus 3,000. In futures, it is the same problem. If he trades one contract of NQ and gets hit for 150 points against him, he blows through the daily limit on every connected account. One mistake multiplied by 10. That is not trading. That is gambling with a louder keyboard. Real rotation rewrites this entire story. Start with a clean concept. Only one account trades at a time unless that account is already ahead for the period. This simple idea protects psychology, reduces stress, and makes payouts predictable. A trader begins with a fresh 100K Forex account. He trades normally with 1% risk. If he hits 2% profit, meaning 2,000 on that account, he stops trading it and parks it. He does not touch it again until payout day. That account is now safe. It does not matter if the next week becomes choppy or unpredictable. That account is already locked in. Now he moves to the next account. Maybe this one starts rough. Maybe it goes down 1%. That is fine. He keeps working it until it breaks even. When it touches plus 1% or 2% if the market offers clean moves, he parks it as well. Payout number 2 begins cooking without stress. During all this time, the first account is growing quietly, safe from emotional mistakes. This simple rotation creates a staircase of progress that keeps climbing even when some accounts go into drawdown. The same idea works with futures, but with slightly different rhythm. Futures have sessions. The trader can use that to his advantage. He can keep 2 evaluation accounts active during the first hour of the United States session. These eval accounts act like scouts. They test the market to see if the price is respecting levels or breaking levels. If he hits a small profit, even something as simple as $100, he moves on. A futures trader who tries to squeeze every drop from an evaluation account usually blows it. A futures trader who treats it as a scout account almost always succeeds long-term. Once the scouts show that the strategy is working for the day, he can activate one funded futures account for the real move. If the funded account hits the daily goal, which might be something like $200 or $300, he parks it and goes back to the next evaluation account. This rotation protects his best accounts from the early whipsaws of the day and uses evaluations like armor. The trader never activates all accounts at once. That is the old thinking. The new thinking is simple math. If a trader wants to make $500 in a day, he does not need a $500 win in one account. He can make 50 in 10 accounts. The emotional stress is completely different. A $50 target is tiny. The market can breathe all at once without scaring the trader. This works in Forex as well. 1% on one account may feel heavy, but 1% across many accounts spread across days feels like nothing. To make rotation even easier, many traders use trade copiers, but they do not use them the way beginners do. Beginners turn on every account and pray. Rotation traders use a copier to switch accounts on and off fast without logging in and out 20 times a day. The goal is not to blast all accounts at once. The goal is to activate one account at a time with a single click. When the trader wants to switch accounts, he simply turns one off and turns another on. The risk stays the same. The psychology stays calm. This is how traders keep scaling without melting their brains. Forex rotation has one more powerful rule. Never stack all swing trades on all accounts. Swing trades come less often and have a naturally higher win rate. That is why swing positions deserve higher trust but lower frequency. Intraday trades come more often and move faster, so risk must be lower. The trader separates them. If he sees a swing setup that looks strong on a 100K account, he might risk 2%. But he takes that swing only on one account. He does not copy it onto all accounts at once. If it hits stop loss, he loses 2% on one account, not 2% on 5 accounts. That is the difference between surviving and blowing everything. Intraday trades are used for rotation. They are safer when copied because the risk is smaller, maybe 1% or 0.5% per position. The frequency is higher, so even if a few trades fail, the total damage is small. By rotating intraday trades and isolating swing trades, the trader protects every part of the system. Futures rotation has another advantage. Different sessions offer different personalities. The European session is cleaner and slower. The United States session is full speed. The Asian session is controlled and calm. A trader can rotate accounts using sessions instead of days. He can use one account only during the first hour of Europe. He can use another account only during the open of a United States session. He can use a third account only during the Asian relief hours. This spreads risk across time instead of across money. The fewer variables a trader handles at once, the more consistent he becomes. Another key element of rotation is understanding the cost of blowing accounts. In futures, some firms have low evaluation fees. If a $50K futures account costs around $30 with a subscription cost of around $100, the total risk to attempt a payout is around $130. If that account has the chance to pay $2,000 or more, even losing 4 accounts still makes financial sense. But instead of blowing 4 at once, the rotation method makes sure that only one is at risk at a time. This increases the profit to loss ratio dramatically. Forex rotation also creates predictable psychology. If a trader is working on account 3 and accounts 1 and 2 already have profits locked in, he does not panic when account 3 hits drawdown. He knows money is already cooking in the background. This removes fear from decisions. When fear leaves a system, the system becomes consistent. When consistency grows, payouts multiply. Think about this simple example. A trader has 3 accounts of 100,000 each. He risks 1% per trade, which is 1,000 per account. On the first account, he loses 1%. He stops trading that account for the day. He moves to the second account. That account also loses 1%. He parts as well. Most beginners would panic, but he knows the rotation principle. He switches to the third account. The third account hits a 2% win, which is 2,000. So he lost 1,000 on the first account and 1,000 on the second account, but made 2,000 on the third account. The total across all accounts is 0. Break even. But here is the twist. The 2 winning accounts are not the same. The payout rules measure profit by individual account, not combined equity. The third account is up 2,000 and meets payout conditions. The first two accounts are in drawdown, but can be recovered later. This is the power of rotating instead of stacking risk. With futures, it is similar. If his Scout evaluation account loses $100, he stops immediately. Next Scout account loses another 100. He stops again. Then the live funded account enters during a clean trend and makes 300. Even though the total net is only 100, the funded account has met the daily profit target and is now one step closer to withdrawal. The evaluation accounts can be rebuilt later. The priority accounts are protected. Rotation turns probabilities in your favor. Without rotation, a bad day hits every account at once. With rotation, a bad day only hits one account at a time. Without rotation, the trader makes one giant emotional decision. With rotation, he makes small, simple decisions. Without rotation, everything depends on one or two trades. With rotation, the trader gets 20 to 40 safe opportunities each month to lock payouts. This is why the most reliable traders treat each account like a separate business station. A business does not use all of its money for every idea. It tests one thing, then expands. It repeats the cycle. That is exactly how proper account rotation works. Understanding the rotation plan also helps remove another weakness. Many traders feel the need to prove themselves. They overtrade. They force positions. They want to make a big statement. Rotation makes statements unnecessary. When one account hits 2% and is parked, the trader already knows success is guaranteed for that cycle. Everything after that is optional. There is no pressure because the first goal is finished. This prevents spirals of revenge, trading, and desperation. Traders who ignore rotation often say the same thing. They say they want to make money faster. But speed without structure is the fastest way to restart from zero. If they rotated, they would still scale, but without burning accounts. It is like running a marathon. Nobody sprints the entire distance. They sprint, then jog, then walk, then sprint again. That pattern protects the body. Rotation protects the accounts the same way. Another part of rotation is deciding which account gets which role. A wise trader has an account for testing new ideas, another account for swing trades, another account for intraday rotation, another account for high-confidence setups, another account for grinding small, consistent wins. When each account has a purpose, the trader always knows what to do next. When accounts have no purpose, everything becomes random. This is also a perfect time to remind viewers that the pinned link contains the best prop firms and promo codes. It supports the channel and helps people compare rules that matter for rotation plans. Make sure to like and subscribe as well, because new guides on scaling and protecting funded capital are coming. Now the rotation blueprint becomes clear. The trader wakes up. He checks the market. He activates only one account. He trades small and safe. If he hits his goal, he parks the account. If he hits a loss, he stops using that account and activates another one. This is the core rotation loop. He repeats it daily or weekly depending on his schedule. Over time, he builds a chain of small wins that stack into large payouts. There is one more benefit that traders often overlook. Rotation takes the emotion out of decision-making. When a trader trades the same account every day, he develops emotional attachment to the number. When balance rises, he becomes overconfident. When balance falls, he becomes fearful. But when he rotates, he never looks at one balance long enough to become attached. He treats each account like a tool. Tools do not hurt feelings. Tools do not trigger panic. Tools do not cause ego. They simply do the job. The trader becomes calm by default. That calmness is what separates consistent traders from chaotic ones. A chaotic trader doubts himself every hour. A calm trader follows the system with no hesitation. The rotation system does not care about mood swings. It works even when the trader feels off. That reliability is priceless. Rotation also works even if the trader has only 2 accounts. It works even with one funded account and one evaluation account. It works even if he only trades one market. The system scales up or down based on the trader's capacity. The rules remain the same. One account trades. One account rests. One account collects profits. One account recovers. That cycle gives the trader structure even on messy weeks. With this rotation plan in place, payouts stop being a rare event. They become a habit. The trader knows that even if 1 or 2 accounts go bad, another account is already sitting in profit. This is the hidden advantage that most traders never see. Prop firms pay based on individual account performance, not on total net worth across all accounts. So even if one account is in small drawdown, another account is ready to withdraw. This creates a steady rhythm of income. This is how traders survive long enough to hit huge milestones. Many traders can trade well. Very few can stay funded for years. Rotation is the difference. Remember this simple sentence. Do not bunch everything together. Rotate, separate, protect, scale. That is the entire model. Make sure to check the pinned link for the full list of prop firms and the best promo codes. Support the channel by liking and subscribing because more rotation tutorials are coming. This is the new standard. This is the rotation blueprint, and it works.